What's going on, guys? Welcome back to the channel. My name is D'Anthony with evolutiontraders.com. Now we're going to be taking a big overview look on exactly what the hell happened to the market today. We're going to just dive right into it. So first things first, we're going to look at the S&P 500, right? But before we even get started with the charts, we had PPI numbers come out this morning. You know, the market drastically kind of pulled down in the pre-market session, right? And I was kind of letting everyone know in the Discord this morning, look at, you know, there's one of two ways that you can play this. You can kind of sit out the first 30 minutes to an hour of the market open, kind of see, do we confirm these lows going later on in the day? Or what you can do is, you know, and I hate to use this word, but you know, you can kind of gamble on the initial washout, take some calls or get long shares, and then use that pre-market low as your stop, and then just kind of sit, right, and just let it do its thing. That probably played out for a lot of people if they did that. The market essentially, again, you know, did nothing for a good portion of the day. Barcoding, right, going up to the top of the range, coming right back down to the middle, going down to the bottom. Extremely choppy. Apple was exceptionally strong on the day. There was a couple of other names that were strong on the day, but all in all, this week as a whole, you know, we've been range bound. So, you know, we're playing the top of the range. We need to be shorting. We need to be covering in the middle. We need to be playing the bottom of the range, and then we need to be going long, and we need to be selling in the middle, and then just kind of sitting out the rest of the time, right? So if we kind of look, you know, we had a drastic pull today. We had PPI numbers. We had all types of Fed guys talking today, you know, kind of moved the markets. You know, we have some issues with China about their intelligence, you know, aircrafts that we've been shooting down. This, that, and the other, right? You know, earnings, you know, weren't the greatest. It's like there's a combination of things, right, that have been happening. We've been floating up on low volume. We've been on an almost 2-month run up. You know, what else can I really say, right? I mean, if you kind of look at it as a whole, right, this has been a phenomenal run. Now, yes, this week has been a little bit more difficult to trade. We have kind of pulled back into some areas of support, you know, but the bulls are still in control. So do we give them the benefit of the doubt? Yeah, I mean, we have to, right? Until we lose the 50-day moving average on the indexes, we have to continue to give the bulls of the doubt. That does not mean that we can't play short intraday to kind of make some cash flow, right? We all got to pay the bills. So what we're looking at here on the S&P 500, this is a nasty hammer candle that we had kind of, you know, close today, and we did close below the 5 and 10-day moving average, and we're pretty much resting just right over the 20 days. So if we do start to lose this 20-day moving average tomorrow, things can get aggressive, and they can get aggressive very, very quickly. If we kind of look at where the 20-day moving average sits on the S&P 500, it's sitting at around 407.65. We start to crack below that, we've got room to really come back all the way down to 402, 403. Now, I'm not saying that we're going to get there tomorrow, but if we do start to lose the 20-day moving average tomorrow, you will have some names that are going to drastically get pulled down through their supports, and we might be able to take some plays on them to the downside. Again, you're going to have support around 402, 403. You've got more support at 399. Again, our top side, we would need to get back over this 5 and 10-day moving average, and you know, start to take out 413 for us to really say that we've got any momentum of getting back up to 418, 420. Let's take a look at the NASDAQ 100. Got hit very aggressively today. Look at the NASDAQ 100 today. Also hammer candle, did close below its 5 and 10-day moving average. NASDAQ 100 is stepping stones from confirming this 303 area and coming all the way back down to 299. So again, think about it. Long holiday weekend this weekend, you know, a lot of people are going to take their money out. You have to look at it. You know, we have not even tested the 20-day moving average on the NASDAQ since we broke out, going all the way back to the 6th of January. That's almost a 2-month run up without even back testing the 20-day moving average. So before anyone starts saying, you know, running for the hills and you know, selling everything and telling everyone the market is crashing, guys, the bulls are still in control, and until we lose the 50-day moving average, these are all just short opportunities that we can play for intraday cash flow, right? So play this down into the 20-day moving average, make some money. You know, you can still be bullish. You can still be bullish on the NASDAQ if we get down to 291 even, guys. So, you know, there's going to be areas to make money. It's just, where do you want to make those? Where do you want to make that cash? Are you a swing trader? Are you a scalper? Are you a day trader? You're going to have different levels. If you guys want to know live levels, make sure to join evolutiontraders.com. I'm in there talking live. In fact, today I went live for an hour, traded a few names, traded Tesla and Nvidia live. That video will be posting to YouTube shortly. You guys can watch it. It's only an hour long. Let's also look at Let's look at some of the big dogs, right? So Tesla has been on a phenomenal run here. Tesla did get rejected today at its 150-day simple moving average. Again, another nasty hammer candle. If Tesla starts to lose $200, 250 cents, this has a lot of room down, all the way back down to 186. Now, again, I'm not saying that these levels are going to come into play tomorrow, but if we do start losing this LR50 as well as this rising 10-day moving average tomorrow, any type of bounce or green open or flat open on Tesla and consolidation, and then a roll through of this area here of 200, we can get more aggressive like the way we've seen today. Nvidia had a nasty downturn today, intraday. Nvidia also same kind of story, right? Nasty hammer candle that's forming on Nvidia. If Nvidia starts to confirm 219.20, it's got a lot of room down to 208. This is a short trade that we want to look at. We still have our top side resistance sitting at 230. This is a big level. Anytime we break 230, we're going to want to get long. But you know, for the short term here, again, Nvidia, the same story. We have not even tested the 20-day moving average since we really broke out of that 20-day moving average, going all the way back here to the 10th of January. So essentially this trend has just been riding for a month and a half straight, right? So if we do start to break below that, this is okay. Take advantage of that short opportunity between 219.20 all the way down to 208. Let's see what we do here. Again, the trend does not change on from a bull bias until we lose this 50-day moving average, and that's sitting at 179. Your supports are going to be 208 and then 185. Now you may be thinking to yourself, those are big ranges, right? That's a, you know, that's a long ways down. You know, I don't want to sit there and wait for the 230 to break if we're going to go all the way back down to 186. That's 50 points away, right? Well, you know, make some money on the downside in the meantime, right? In the meantime, we can make money on the downside, and you know, the trend on the uptrend still holds as long as we don't lose that 208 level. If we start losing the 208 level, then we've got more macro room down to that 186. Let's take a look at Apple. Apple has been a leader and been exceptionally strong, and actually broke out today, and actually Apple looked like it could go to 157, 160. That's the next area on Apple that we're going to be looking for before this mean reversion that we had here on Apple today. I mean, this reversion, this you know, change that we had on Apple with this drastic sell-off kind of just took us right back into this floating support. Now this support of the 10 and 5-day moving average is still bullish for Apple. I don't like the hammer candle here. I could see Apple kind of trading down into 152, 151 tomorrow, somewhere in the middle of this range here. Again, you know, your macro short trade that you're going to really want to look to capitalize on is below 151.88 down into 148. So Apple's just kind of resting on support. Meta is a stock that looks exceptionally weak today, and even when the market was rallying, it didn't do shit, right? So what we're looking at here, this has been trading below its 5-day moving average for the past 2 days here. And you know, and kind of briefly tested the 10-day. This candle here floating, closing at the bottom of the range here, 171.77 on Meta, has room down to 165. Now maybe we get 2-3 points tomorrow, we kind of still continue to close in the middle of the range, or maybe we get some sort of flush and then it immediately starts to push back up, right? But the short position I'll be looking to take on Meta is below 177 in that area. Let's take a look at Netflix. Same story here, guys. I'm going to be, you know, it's going to sound a little bit repetitive. Hammer candle here. If we do start to confirm 350.33, we've got initial push down to 346.76, which is your rising Bollinger Band. Now these Bollinger Bands are getting exceptionally tight on Netflix, telling us that a big move is coming. Is that big move going to be to the downside? We're going to have to wait and see. But what we're looking at here is if Netflix starts to confirm today of 350, we've got room down to 345. Anything below, you know, this channel that we're looking at here from the 13th, that price is going to be around 344.39, has room to come all the way down to 331. That's going to be your macro trade that you're going to want to be involved in. Again, our top side resistance is sitting still in this zone between 369 and around 380. This zone, very, very tough zone here. A lot of consolidation, a lot of barcoding here going on. Let's quickly take a look at Coinbase. Coinbase actually had a nice little pump today, you know, over yesterday's highs. You know, took out those yesterday's highs of 69.28 and shot all the way up to 73.60. So again, people continue to make money on Coinbase here. Coinbase is coming down into supply. Our support, we're going to have support at around 62.81 as well as $61. Let's look at AMD really quickly here. AMD, same kind of story here, just lost its 20-day moving average. So for anyone looking to swing trade this, you know, if we confirm today's lows here, we're going to get long, or we're going to get short below $80 first price target's going to be 79.12. Again, if you're going to swing trade that, we're going to look to break through this 200-day simple moving average, and your big macro price target's going to be around $75. You would close out technically over 83.25. Again, that's about $3 worth of risk there. So just understand, if we do get back over the 5-day moving average, you're going to have to exit that position to the short side. But you know, again, the downtrend does not break until we lose $72. We do have a little bit of a gap to be filled here between 75 and $77-$78 here, so keep that in mind. If we do start to lose the 200-day moving average, this has got a lot of room and explosive room to the downside there on a small subpar $100 stock. Let's look at Mr. Softy really quick. If we look at the soft man, Microsoft here, Microsoft, same thing, never really rallied today, never really got above yesterday's highs or even in that price action. Again, tried to shoot up, got rejected at the 10-day move, or at the 5-day moving average, kind of trickled around. This is a nasty hammer candle here that is setting up that if it starts to confirm 261.92, you can see how much room we have down. Now, it doesn't take a rocket scientist to kind of look at the charts today and see that we close at the bottom of the range. If we confirm today's price action, we have a lot of room down. If you're going to try to bounce these stocks from here, the question you have to ask yourself is why? Why are you going to go long? Why are you going to bounce these? Because maybe we can have a dead cat bounce? Sure. But unless we take out today's highs on any name, nothing is a long, right? Now, that's different if you're a scalper. If you're a scalper and you're going to buy into that short-term support and you're going to bounce it for, 20, 30 cents, try to make 15 cents on the stock, be my guest. But I'm talking about people who are trading options, people who are, looking for a bigger expansion move. Your bigger expansion move is to the downside as of right now, right? Things can change. And again, remember, my technical analysis is for tomorrow. It's not for next week. It's not for 2 weeks from now. It's not for 6 months down the road. I'm a day trader and I scalp. The average hold time on my options is under 10 minutes. The average hold time on my shares and equities trades is under 5 minutes. So I am in and out of trades within 5 to 10 minutes. I'm waiting for my levels to confirm. I get short or I get long. I rack in the money, or I get stopped out. There is no ifs, ands, or buts about it. I'm not looking for huge moves. If you guys are interested and you want to learn how to day trade, join evolutiontraders.com. I got 2 video courses in there. I got over 30 training videos. I've got a live community of other traders who are doing this on a day in and day out basis. 2, if you have the problem, I don't have enough money, I don't have capital, I can't day trade. I work and I just got set up with a great firm that's going to allow you to get up to $1 million in funding. Now, again, disclaimer, I'm not going to tell anyone who is just getting started to take $1 million under management. Get 100,000, get 200,000, get 50,000, get something small, build that account up, and you can always ask and request for more leverage later. But if you're looking to kind of get funded through a prop firm that's going to allow you to trade Tesla, it's going to allow you to trade Apple, Amazon, the triple Qs, the SPY. You want to do all that. You want to trade crypto maybe and futures, and you don't want to join a prop firm that just makes you trade futures or forex or something like that. You want to trade stocks. That's you love these companies like me. Again, I trade a little bit of futures with a different prop firm. They're great, but I just love trading the stocks, right? If you guys watch my channel, you know I love trading the stocks. So with that being said, I'm going to kind of wrap up this video. Make sure to join Evolution Traders. The way to get access to the Discord is through Evolution Traders, becoming a lifetime member now. I got too many people coming into that room, getting in there and then changing their name, becoming fake me's, and then, trying to ask people questions, right? Like it's a headache, right? I only want to work with serious people. I don't have time to play games. I do this for a full-time living. This is how I make my money, by trading, right? So I need to have a clear head. I can't have people in there trying to impersonate and do something random, right? So that's completely locked. You can only join if you become a member and you actually pay, right? And it is what it is, right? Like some people say, well, you can get education for free. Of course, there's millions of videos out there you can learn for free. I would recommend everyone to learn for free. I would recommend everyone to study as much as you can for free. But if you need guidance and you need a strategy and you need people to trade with and you need levels and you need to ask questions, you need help with mentorship, I can do that for you guys. Again, I'm going to tell you this. Reading these charts on the screen, that's the freaking easy part, okay? Finding a setup, finding a strategy, that's the easy part. You want to know what's hard? Up here. You got to learn how to lose. You got to learn how to lose. The best traders know how to lose. The best traders are emotionally disattached to money. They're emotionally disattached to winning and losing. They feel the same whether they win or they lose. It's like clockwork. Okay, how do you do that is a whole different thing. That's going to take 3 to 4 months, and it's going to take 3 to 4 months of hard discipline, training, coaching, and it's also going to take you to actually go through the motions and practice correctly. If you never really practice correctly and disassociate from, you know, those feelings, those emotions, the anger, the revenge, you know, the getting upset when you're wrong, guys, we have no control over where the stock goes. All we can do is react to what the price action is doing. If you're wrong, you're wrong. Where in trading does, you know, anyone care if you're wrong, right? Like who cares? The only person who cares that you're wrong is you. The only person who cares that you're wrong is, you know, what you have going on in your mind. So you lost the trade, find another setup, get in. Do you want to lose, you know, $1,000 on one trade because you're hoping that it comes back, or do you want to lose $100 and look for another trade that could potentially make you $300? It's like, it doesn't make any sense to me why people get so emotionally attached to a single trade. Guys, I'm taking over 30, 40, 50 trades sometimes in a day. I could care less about what I did 5 trades ago. Either the setup was there or it wasn't. If it was there, like today, go watch the live video where I was live streaming. I got into like 2 trades and immediately got stopped out within like 2 minutes. Move along and find the next one, because the third trade ended up going for like $200, right? In my money, I got 2 points. I only took 1 lot on it. I think it was Tesla. I ended up flushing down for 2 points, right? And it's like the first couple of trades I got, you know, I won like I think it was like $25. I just didn't like the way I felt in the trade. And then the other one, I think I lost, you know, a little bit of money, like cup of coffee money, right? And then the third trade I took ended up going. So it's like, that's the way it is, right? But if I was so bent up out of shape, holding one particular position going one way, and the next thing you know, you know, I'm still holding it when it's running against me, hoping that it's coming back, when all the meanwhile I could have been in the other way, you know, like, so think about it for a second. But anyways, with that being said, guys, hope you guys enjoyed the video. It's a little bit of a longer form video, kind of compressing all of the stocks that I normally do one by one, and just going to do it on one video. Hope you guys enjoyed it, and I'll see you guys all in the next one.